Good morning. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Here we are the second week of February, and the markets still continue to chop around. We're still stuck in a trading range. If we look at some charts of the S&P and Nasdaq, we can see this is actually going on since mid-November. So it's hard to be making some money either on the long side or short side because the market does keep finding support, bouncing back up. The other hand has some overhead resistance. Now, it does look like the market does want to break a little more to the upside. And the reason I'll say that, if you look at the S&P 500, it's had about 3 little mini corrections since about December, and each one tends to be getting a little bit shorter. It keeps getting support. So actually the levels we're watching the S&P, seeing if it can hold that 1970 to 1980 level on the bottom. Right now its first level support would be about 2043, that's at the 50-day moving average, and of course overhead resistance would be at about 2093. Now looking at the Nasdaq the same thing. It's corrected about 3 little mini corrections since December, but each one keeps getting smaller and smaller, compressing to the upside, and the Nasdaq continues to make higher lows, indicating again this market may want to break to the upside. So the Nasdaq we're watching, make sure it holds the 45.47 level, that's the December lows. Immediate near-term support would be the 50-day moving average right at about 47.10, and on the upside the overhead resistance at 48.14. So from a trading perspective, you might want to just wait and see if the market can take out those highs, break up to the new upside. That'll tell us that the market does indeed want to move higher. Now another encouraging sign is if we look at the mid cap, that's the S&P 400 index, pretty much near its highs, just right there, just trying to break out. Not quite doing it, but that may be a leading index. As same thing we've seen in the Russell 2000, the small cap index, or the S&P 600, another small cap index. So these are leading indexes, and if they start taking out those highs, that may lead us further. Now the question is, what's underlying? Why should the market go higher? Well, U.S. economic data continues to be very positive. There's some small snafus here and there, but generally if you look at the ISM, manufacturing data, the payroll data, everything is acting pretty good in the U.S. Now, if you look at the sectors, a pretty good thing happened on Friday. The utilities crashed, and the reason I say it's a good thing, if you look at the XLU, is because that was a safe haven. People were moving to utility stocks for the dividends, but I think they were pretty much overvalued at this point. On the other hand, we start seeing the consumer discretionary sector, or XLY, pretty much hitting new highs. That tells us that growth stocks are back in favor. So the things I'd be looking for is you can look at some individual stocks that have broken out recently, and see if they hold up. And if they hold up, they may be telling us something about the market. And that's stocks like Biogen, BIIB, broke out, continues to hold that big gap up. Last week we saw LinkedIn, LNKD, break out, and also still holding the gap up so far. Now, we have a few stocks that are still at the pivot, stocks like Under Armour, attempting to break out, not making quite headway yet, or NXPI, NXP Semiconductors, also past the breakout zone, but kind of pulling back in, so it hasn't quite broken away. Now, you can also look at a stock like Actavis, that's ACT, that's a pharmaceutical stock, also right at the pivot, still hasn't quite run away. And actually last week too, we saw the CME Group break into a new high, and it's holding that level too. We saw Starbucks, SBUX gap up about 2 weeks ago, and still holding that gap up. So a lot of positives going on, but it is sort of a churning market, hard to make headway long or short. So as a trader, you want to just kind of like be a little bit patient. Could try nibble on the stocks as long as we keep seeing that the S&P 500 and Nasdaq hold support, and take a look at the mid cap and small cap stock indexes. If these break out, they might set the direction for the market going forward. So as always, let price and volume be your guide. Look at the indexes, look at the individual stocks that moved up, and that'll tell you which way the market's going. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Good luck trading.